Well, the big banks have unveiled some very healthy profits, but for one smaller country cousin, it's been tougher going. Bendigo and Adelaide Bank has posted a disappointing full-year profit. Its bottom line, the victim of high funding costs and low demand for credit. Emily Stewart reports.
The community bank has hit a rough patch.
The year for us has been one of consolidation and investment. The market itself hasn't allowed significant growth because of the demand for credit, yet nevertheless we've performed pretty well on that basis.
The bank posted a net profit of $195 million, down 43% on the previous year. That figure includes a $95 million write-down of the wealth business. Cash earnings were also down 4% to $323 million.
There's no growth in Bendigo at the moment, and it's true for the banking system as a whole, but in Bendigo's case they had margin decline which offset what asset growth they had.
More than 80% of Bendigo Bank's funding comes from retail deposits, but there's fierce competition amongst lending institutions for those dollars. And in the past year, the Reserve Bank cut official interest rates a number of times, which put pressure on margins as lenders tried to keep their rates attractive.
The reality is it does take time to recover those margins, but as we look like we're heading now into a less aggressive easing cycle, if it continues to be an easing cycle, hopefully we won't see as much volatility in the price we're having to pay for term deposits.
But with more people saving, Mike Hurst says arrears remain low.
They're actually paying off more principal than they have been in the past. That goes hand in hand with the increase in the savings rate within the economy. I think people are cleaning up their own individual balance sheets, and that's a good thing.
And there's been a reduction in collective provisions or reserves held for a general deterioration of the loan book.
It's very odd that the collective provision would fall in that context. The fall in the collective provision helps the bad debt charge fall and therefore is a positive to profit. But even after doing that, profit's not going up.
Demand for credit has also hit the bottom line, but Mike Hurst sees hope on the horizon for the housing market.
Whether or not it's bottomed out, who knows? I think the key to housing prices is really employment. Employment seems to be holding up at the moment, and whilst ever that's the case, I don't see a significant fall ahead.
Mike Hurst says the outlook for the coming year is too difficult to predict, with market volatility and revenue challenges affecting all banks.